everybody. So good to be back with you this evening. Oh man, 1 week off just felt wrong. It's so good to be here. So let's get into it, guys. You know what? I was just like thinking about where we are all over the world. So, guys, drop in the chat wherever you're tuning in from. I know most of us are New Zealand, but I know Jacques, you're all the way in South Africa. And I was just thinking about all the nations that we have in our team. And obviously, right now for us in New Zealand, most of us are going to be on right now. But I know we've got a whole lot all over New Zealand. But I was just thinking, I know we've got New Zealand, Australia, South Africa, Canada, the US, Panama, England, France, India, Malaysia, and I'm probably forgetting one or two right now. So please, anyone, I want to hear if there's anyone. Ireland, Sean's in Ireland. That is epic. Wayne, I know you've done a Wanaka. Kelly and Tara, Coromandel, beautiful. Maria in Auckland as well. Angela's in Northland. Lisa, yes, in Sydney, good to have you with us this evening as well. Guys, this is so cool. I mean, the nations are literally in our squad, and I know that obviously the academy's in far more nations than those 10, but it's so cool that even in the midst of our community, we're already in 10 countries. So super fun. There's the text, just my wife reminding me that I might be just a little bit too loud right now. So kids are sleeping, at least one of them sleeping, I know that much. If only he would sleep all night. You can join me in prayer for that, folks, that Luke would sleep all night. Appreciate that. but besides that, guys, got a real big announcement I'm going to drop in a minute. But in the meantime, man, just want to share with you a little bit of something. Like I had the privilege of being able to preach on the weekend, and really just been going after some real big, biblical foundations for finance, and really just diving into that and exploring what that looks like. Got into, just looking at the life of Jesus and what it looked like for him to step into wealth and manage it. And I mean, when you're looking with economic eyes, you start to see economic things. And just one verse that stands out to me so much is this in Proverbs 13:22, where it says, "A good man leaves an inheritance for his children's children." And if anyone's got any weird religious poverty mindset, just quote that verse to them. That to leave an inheritance for your children's children is going to require something a little extra most of the time than a 9 to 5. It's going to require intentionality. It's going to require generational vision, generational goals, and showing up and doing something extra, something different, something that doesn't require just trading time for money. And yeah, so obviously just so stoked that we get to do this. But had a look at quite a few other things. It's like when you start looking at things like even the classic, like the Good Samaritan, right? It's like he managed to, in the drop of a hat, see a stranger, someone he didn't know, pick the guy up, put him on his transportation, take him to the local inn, book him in, pay for all his medical expenses, and give enough money to the person there to say, if this doesn't cover it all, I'll make sure I cover the rest of it when I get back. And if you think about that in some nations, like covering someone's medical expenses, their accommodation, potentially clothing them, doing whatever, like we're talking about a really big bill for someone that you don't even know. And therefore, I would say that assumes that those you do know, you show just as much love, if not more. And that requires margin. Like that requires having a bit of a buffer. And so I'd say the Bible in that sense really just has that theme of, the Good Samaritan, a good man leaves an inheritance. Like that idea of what does good look like? Like I believe there's space in there for us to believe for high amounts of abundance. At the same time, though, we've got to show up and do our part, right? So, I mean, yeah, had a lot of fun looking at a whole different, a few stories that, most people know in the Bible, but really just pulling it apart and looking at it differently with some economic lenses. So anyway, that was just some fun from the weekend, but just want to encourage you, like you've made a decision, you're here and you're going after that. Like each of us have got a different freedom dream to some regards, but for the most of it, it usually equals time freedom, financial freedom, and some measure of impact and influence that we want to have in terms of being able to help others around us in a greater way. And so just want to commend you all, like for showing up, like not just tonight and consistently, like throughout our boot camps and late at night on Jay's Go Live. Like I know, shout out to Lisa and Zeph and Alicia and anyone else that I know is consistently jumping on Jay sessions. I was on there last night at midnight and just haven't been able to lately because Luke just has not been sleeping well, but he will. And but yeah, guys, like showing up when it's not convenient to learn in a live context is massive. And obviously we've all got to juggle the things that we have. But aside from that, just want to say super proud of everyone for the work that you guys are putting in to learn this, and just leaning back and giving yourself grace that this does take time. But when you think about it, it's that idea of, and I know like we've got incredible mindset through the majority of our team with us. It's like none of us are expecting to nail this in 2-3 months. Like that's not the case. When you think about what the reward factor is, like the reward is essentially full freedom to be able to work from anywhere, almost whenever, for an hour or two a day. and then to have the rest of the day for whatever, or the rest of the night, whatever it looks like. And then you got to ask yourself the question of, what is that worth? Like, when you think about what people spend to become a doctor or a lawyer or a pilot, like the journey of education for, a significant salary. At the same time, we've got doctors, pilots, lawyers, like, doing this because at the end of the day, it's still time freedom. You still might be getting paid a lot for your time, but you're still trading your time. And so with that, the skill set does take time. People spend 2, 3 years, 4 years, sometimes longer, getting a significant degree. And it's like, some people get this quicker than others, but at the same time, just leaning back and giving yourself grace to know that there's going to be the initial acceleration, and maybe the like, wow, I feel like I get this, or maybe not. Maybe initially it feels like it's super foreign, and then you hit a stride and you've got amazing results for a season, and then, something just isn't clicking, and the markets just look like it's not behaving itself, and you hit the wall, and you just feel like there's a season of almost like a downward spiral. And that happens. Like, honestly, we all experience that at different degrees here and there. And if that's the case and you're experiencing that, rather reach out either to me or whoever initially connected you here, and just have a conversation. Just get honest about what's going on, and that might be a good opportunity to lean back and start thinking about, like, okay, what are the setups I'm taking? Am I documenting and journaling my trades? Can I go and look back, and so that I'm not just losing, I'm learning? Because we're either winning or we're learning. If you're taking a loss, it's only a loss if you're not able to go back and learn from that exact thing as to why you took that entry, and why, for whatever reason, it didn't go according to what you thought it would. So, and that's the skill set we're learning, guys. Not every single signal, all signals aren't exactly created equal. Like, we've got to still learn and see what's going on with structure around that and things. So just peering over at the chat and seeing, man, so good to have all of you guys commenting in here. Just, man, so much love and appreciation for all of you. Super fun. Super fun. Ron, Tasmania. Yes, there we go. Another one from I mean, obviously Australia, but another island. That's so cool. So good to have you guys. Ecclesiastes, yes, there we go. Like, super cool, Grace. I love that. Yeah, right. Like, I mean, it says in that verse, right? I think, like, money is the answer to everything. It's one of that verse pretty much says, to some degree. I believe it's that one. And it just challenges, right? Like the mindset of what we've been taught. Like, I can't tell you how much I can't stand it when people say, money is the root of all evil. And they quote that as if they're quoting the Bible accurately with confidence. I'm just like, man, it is the love of. And anyway. Don't want to get distracted, but guys, wanted to just take a moment, so I can see there's a bunch of us on you. Happy Anzac Day in that regards as well. This morning was pretty cool. Went up Stockade Hill here in Howick, and there was a pretty epic ceremony up there. But yeah, huge day in the context of history, right? For what we have, and for those around the world, Anzac Day for us is a time where we honor all of our veterans and current servicemen who went over and served in the war and really gave up so much. In a time where you would say goodbye, jump and go on a ship to the other side of the world, where you couldn't exactly pick up a phone and let your loved ones know, like, huge amounts of sacrifice, right? It just gives you so much perspective. But so anyway, so right, guys, so we in the background, Mike and I, we've been talking for so long about doing something that I know you guys are going to be excited about, because it's been a long time since we've done this. But we have got a date locked in for our next live event in Auckland. So we are all going to get together. Mike is going to be up here, and we're going to be planning some more as well, potentially, in Taupo and beyond. But for now, we have got a date locked in, and I want to encourage you guys. We're giving you plenty of time to diarize this. So it's going to be a Saturday night, same place, same time as our previous ones. I think we've done the last few on a Monday night, but we thought, we'll do this one on a Saturday and really just widen it up. And most people with enough warning can make it a priority. But we're looking at Saturday night, the 13th of May at the moment, which is about 2.5 weeks away. And it is going to be a blast, guys. For those of you who don't know, the first event that we put on, we had like 80 something people show up. And so really believing, and we've done 2 of them, but this one, it's been a while. The last one we did, I think, was like September. So myself, Mike, all of you guys, this is an amazing opportunity for us to come together, to share some nuggets and what we believe in. And really, at the same time, it is the most perfect opportunity to bring a friend, to go and just, invite someone to come and have a look at what we're doing. You all can remember that first conversation where someone shared this with you, but it is so powerful to actually bring someone along, put them in a room where they get to see, myself sharing some information, and obviously Mike being able to break down some things on the charts. This helps someone who's brand new, who's never seen this, start to think about how they can actually start to compound their money and really start to proactively move towards creating that inheritance for their children's children. So Saturday, the 13th of May, I'll create a Facebook event, guys. We'll create some cool graphics, and you'll be able to get into that event, click invite, share that event with anyone. And guys, honestly, like, just just offer to pick people up, bring them along. Like you cannot quantify what one phone call or one event will do for someone's life. Like just think about if Rich never called Jay, we would never have Kill Shot. And I wouldn't be here, none of us would be here. But because one person decided to pick up the phone and let someone know that there's something else, there's another way that we can do this. And so I want to encourage you, once we'll get all that info, we'll drop it in the chats, but it'll be so fun for those of us who are in New Zealand, who are in Auckland, within driving distance, to have some FaceTime. And shout out to all you Aussies. We've got plans as well. I would love to do an event in Australia by the end of this year. And at least one, there's already one I'm having conversations with organizing. So guys, if you're hungry and you'd like me to come and visit your city, wherever you are, if you're somewhere else in the North Island, maybe even down in Christchurch, who knows, I'm keen. I'm all in on this year, and I want to help as many people get plugged in as I can. So Saturday, 13th of May. Anyway, enough waffling for me. I know that we have, oh, look at that. Jeez, chat goes crazy when it's a screen. I'm going to look all the way over there and have crazy peripheral vision. South Africa, I tell you what, Jacques, not kidding. My family's there right now and very seriously thinking about it. Very, very keen. I know we've got quite a few people in South Africa in our team scattered around, but it'd be so fun to bring you all together and do something powerful. So I'm keen, man. Very keen. Right, whereabouts in Auckland, Wayne? It'll be at Horizon. It is our church in Ellerslie, really close to the motorway, super central. So it's easy for everyone north, south, east, and west to get to. We've got a cafe upstairs. We can seat 80 to 100 people. And I'm believing that our next event later on in the year that we're going to pack out an auditorium downstairs with a couple hundred. So if you're with me, then let's do this. Let's invite as many people as we can, because I would love, I'm having chats with Rich about him coming back down here as well, and we want to put on something special, guys. So really want to build towards that, get some momentum, get us back in the zone of just inviting people to see what we're up to, and really just let them experience our community. And honestly, for us to be able to hang out and have some FaceTime, because Zoom only goes so far. I would love to be able to reach out and give some of you a hug, and shake some hands and just be able to actually have some FaceTime and build some real connection, and even later in the year, maybe even do a barbecue or something like that. But enough waffling from me. Guys, this evening we have got Mike on with us, and it feels so weird having skipped a week, but I know that for school holidays, giving him a little bit of a breather. The charts have still been moving, but it would be amazing this evening for us to give him the floor. And Mike, I'm going to find you guys. Drop some love in the chat, and Mike, just giving you full freedom, man. Whatever tonight doesn't have to be a long one. It is a public holiday, so just want to give you space, man, for whatever you've seen recently, whatever you're seeing. Just whatever's on your mind and on your heart for us tonight, and we'll see what's happening on the charts, and we'll take it from there, man. So once again, thank you so much for your time this evening, bro.
No worries, Ty. Awesome. Hey, Russ, good to see you, man. Hey, great to have everyone here. I'm just going to share my screen. It was really cool actually today talking with my son about Anzac Day, and saying, look, these men that went away paid a massive price. There was a massive sacrifice for us to have freedom, and so because of that cost, we're speaking English. We still have our own culture. We have a lot of amazing stuff that we can enjoy because of the price they paid. And just thinking about what Ty said about sacrifice, it's the same with trading. There's a freedom that that people are wanting through trading, and that comes through sacrifice. It comes through putting time in. It comes through financial sacrifice, through outlaying the initial cost for the course, time, getting up early in the morning or late at the night, whatever it may be. And it's a sacrifice, but there's a freedom that comes from that, which is really amazing. So that's what we're after. And charts are just moving now. I've got a couple of short positions on that we're just long on. That we are just selling off now. Trading my stop down on both of them. And we're going to see how these go, and then we're going to look at the market. I'm going to introduce something a little bit newer tonight, and hopefully we can look at it more in depth in a later session, because it is pretty amazing, and I would like for as many people to be here as possible. And I know it's a public holiday today, so I know they might not be. Just quickly, this is a book that I've been reading recently, a very, very famous book called Mindset, and Ty mentioned recently about failure. And this lady who's a PhD at, I think, Columbia University, she writes about there's two different types of people. There are people with a fixed mindset and people with a growth mindset. People with a fixed mindset believe that their intelligence is fixed for the rest of their life. And because of that, everything they do is focused on their personal identity. So, for example, if they fail at something, they identify themselves as a failure. But in the chapter that I read yesterday, the people with the growth mindset, they never see failure as a failure. They see failure as an opportunity to learn, like Ty just said. So it was just a really good, fresh challenge for me. Okay, I'm pretty sure that I have an open mindset. I have a growth mindset because I want to learn from my mistakes. I do not believe that my intelligence or my ability to receive information and make it productive is fixed, restricted, or limited. But if it is, and some people have been raised with that paradigm of thinking that, I'm not that clever, or I can't really grow much in my understanding. That's actually not true. And so you'd have to make the choice to say, no, I believe it's possible, even if that belief is small, to change my mindset to believe that I can grow up here, because this is everything. And when it comes to trading, psychology is that 80%. The 20% is skill. It's just following the rules and clicking the buttons. But 80% is that, that emotional part of it, the psychological part, which says, what if it doesn't happen? What if I fail again? What if I lose again? And getting over that is the biggest hurdle. So mindset is the most important thing. So if any of you are readers, highly recommend this book. It very, very clearly delineates where you are. And obviously you can see here it has a lot of different aspects of life that you can use that for. So fascinating book. Okay, so just going to have a quick breakdown of the charts, and then we're going to look at some higher time frames to see what's happening and what we can expect, because context is everything. And we're going to move up the time frames tonight and have a brief look. At the moment, pink line is my POC, Dow on the left, NASDAQ on the right. We are short, locked in 25 pips on the NASDAQ, locked in 40 pips on the Dow. If we come up and break above this 50 moving average here, I'll probably close out this one. Over here, if we break above this sort of previous high, then I might look at locking this one in for 25 pips or so. So that, I'm just going to bring that down a little bit here. 25. No. We'll bring down 27 pips, because if it breaks above there, it will probably close high above the moving average, which means we might be getting a turnaround. Now, the other thing that's interesting is if you look at the bottom, after we had the initial push down, the second push failed to break that low. Can you see it failed to break that? So that's possible that we could be looking for a little push upwards. Notice the moving average is now turning around, hooking up. Slightly different on the Dow, because we might be creating what we call a bear flag, or a pennant or something. So that is often a sign of a continuation. If we fail at the 50 moving average, so if we fail there, then we could look possibly for a further move down. At the moment, we are rejecting the 50-minute moving average on the NASDAQ. So it's really important to, again, look at price and see how price reacts to certain levels, because that can help us understand what price can be doing next. And in fact, if I put on the full, that's just, this current setup is an abbreviated version of kill shot where I've taken out a few things. If I put on the full one, there's our blue star. So that move is exhausted. Well, it could be exhausted. So having a stop just above that is probably a great place, because it indicates that we might be continuing the move down. So blue star there, and let's put the full one on here as well. No blue star yet, but I have 41 pips locked in there. So let's just wait and see how that plays out. Okay, so I'm just going to remove that one. And we're going to go out to some higher time frames. And we're going to go, actually, let's go to the Dow first. And we're going to go to a daily time frame. No, we're not. We're going to go to the NASDAQ first. In fact, before we do that, is there another possible trade opportunity right here? Yes. If we cross up on the averages and then cross back down again, okay? That has not happened yet. We had our earlier trade back here at London Open. And for those of you, if anyone got this, let me know in the chat. But notice that that sell signal coincided with the break of the trend line, huge bearish candle, and it was a close below the previous low. So here's our red horizontal line, and you'll notice that the red sell signal was on the candle that closed below. Okay, so entry there. Otherwise, first pull back into the averages. There's your entry, and then boom, you're up 50 pips, 60, 70 pips on that trade. So those are our entries there. Oops, possible entry coming in again, but we need to make sure that we wait for the averages to cross up and then cross down. If they don't, there might be another opportunity to get in the trade. That will be when the candles close back down below both the moving averages. So we'll watch for that. Exactly the same on the NAS. Obviously 50-minute chart in a downtrend. We have this low, which was the spike low from yesterday, about 12 pips away. But notice where price just stopped. It wasn't the most recent support. It was the support from last week. So we now have a triple bottom playing out on the NAS. So we possibly could get a bounce up from here. Now, one thing that's been really amazing to see, in fact, we will have a look at the Dow first on this, is support and resistance levels that show the range that price often finds itself in. Now, last week was really, really amazing because if let's just remove all these lines so we can see. Look at the range that price found itself in here from the 20th. That was for one day. And then earlier, you can see that price has respected multiple times these certain levels. So for example, this is exactly what's happening on the NASDAQ right now, a triple bottom, and then a nice push up. And then the same thing happened down here. 1, 2, 3, 4, 5, 6. So every time you see an area of price that's touched consecutively, you want to mark that because there's a very high degree of probability it will come back and bounce off that level again. So when we had these 5 touches, I marked it. Sure enough, it came back, hit all the stops beneath that, and took off to the upside. So it's really helpful to mark when you see prices trapped in a range, because here's another one that happened this morning. It helps you know exactly where price can possibly turn around from. So if you look to the left, notice price rejected this area here, rejected it again. And where did we come to this morning? New York Open, massive rejection there. And then the close of the day, rejection again. Once the market opened this again after the close, it rejected it again, and that's where we sold off from. So learning to identify key levels where there's been multiple touches is extremely helpful for either getting out of positions or possible places for an entry. So for example, here on the Dow, we switch our indicator back on. We made that, in fact, 2 touches. Here was the first one, sell signal, second one, sell signal, and they were both successful trades. So look for ranges because they're incredibly helpful. Let's just go back and briefly see what was there on the NAS. And here was another one previously as well. So you can see down here, 1, 2, 3, 4. Now, once you get 2 of those, then I genuinely put a line in there to see if we come back and test it again. Once you've got 3, absolutely have a line there. And if you come down there again and look for a bounce on the 1-minute chart, you're probably going to get another trade. And again, this was simply resistance over here, initial resistance becoming support. And look how well that holds. So that's something to watch out for. Let's just have a look at that on the NAS, and then we'll come back and look at some higher time frame things. Just double check the 1 minute chart. Okay, so this is a possible continuation trade now on the NAS. If this candle closes in 25 seconds, notice how we're closing back down below both the moving averages after printing that wick. Same thing here on the Dow. If this candle closes here, aggressive trade with a stop just above the high, and sell on the close of that candle, sell on the close of that candle. This is not a recommendation, but this is another way to join the trend if you missed the early sell signal, but slightly higher risk because the trend is already underway. So obviously, once we have the sell signal, that is the origin of the trend, and so much higher probability of a successful trade. But this is still a valid way to enter the trade because we're moving with the trend. We've failed to hold above the moving averages, and we've closed back down below them. So we've reverted back to the mean. So we've pulled away from the mean. We've reverted back to the mean, and now we could be pulling away again. So I'm already short, so I don't need to add to this position, but I will bring my stop down to just above the high, locking in 31 over here, and high over here, locking in 50. Okay, so that is a possibility. Could do that. Again, this is not the strict kill shot entry, but these are other ways. If you recognize or believe that a trend is very, very strong, this is the way that you can join the trend later. Okay, so the Dow pulling down nicely. NASDAQ, not too sure right now, and the reason for that possibly is that we are potentially looking at a triple bottom, at least for the European session on the NASDAQ, and possibly looking for a move higher. So we have to understand that's the context, and there's a bit of a push up. So that's why context is so important. Zooming out, having a look, but still valid trades. For example, if the Dow there got back to the bottom, there's 20 pips with about a 12 pip stop, and roughly the same for the NASDAQ. So if we pull down to the bottom there, then from where we are now, from that entry, it would have been about 25 pips. So you're looking at about 3 to 1. So again, it's a riskier trade because it's later in the trend, and we've printed a double bottom. Definitely looks like the NAS wants to bounce more than the Dow. And if you look at the way that the Dow is constructed right now, again, when you have this corrective pattern in the context of a dominant downtrend, see how it's corrective against the trend and it's holding above a diagonal line. That often indicates that there possibly will be a continuation of the downtrend. So it's a corrective pattern. The one that comes down is called an impulsive wave, and then we have a corrective wave, and then often the impulsive wave will continue. It's not 100% guaranteed, it's not certain, but that's often how the structure will take place when the market moves in waves. All right, so like I said, I didn't add to my position there, and the market is pushing up. We're going to leave that there, and we're going to look at some higher time frame market structure and just briefly answer the questions. Yeah, sorry. So Selena, yep, bearish engulfing on the Dow. That's definitely a valid trade, 100%. And if I had missed this earlier trade, I would have taken that trade. So I'm already short though, so I don't need to add to that trade, but I would have taken that. Okay, so what we're going to do is we're going to have a look on the NAS, and we're going to look at something which could be very, very helpful. I'm just going to remove my positions so I can see what's going on. Everything's clear, and remove all the lines. Okay, so this is a daily chart on the NASDAQ, and we could do the same thing on the Dow. And it helps us understanding what's happening in the bigger scheme of things. but I want to focus on the Dow because it's a lot clearer. Now, what happens is that when the market pushes up, it moves in waves, and market moves up, we get a corrective wave, and then the market pushes up again. But each of these waves have a certain degree of momentum attached to them. And how do we know when the wave is going to end? Because that's really the key point, isn't it? It's when do we know when this is going to stop so that we can either sell or get out of a trade? And there are some things that actually can tell us when that can happen. Excuse me. So I'm going to introduce another indicator that is not a part of a kill shot indicator, but is something that you can go away and look at it yourself in your own time. And this is an indicator that tells you when one of these waves is possibly coming to an end or weakening. And this is what we call the M.A.C.D indicator. Now, the M.A.C.D is a formula. It's a free indicator that is available anywhere on any charting package. It is derived of a formula between price and the moving averages, 21 moving average, 16 moving average, and a few other things. But what it does is it tells you when momentum of a move in the market is weakening. And that's what we want to know, right? Because if we have a huge move up in the market, when's the market going to stall out? And so the traditional way that a lot of people have used this indicator is by the crossover of the two lines. So when the moving average crosses over, you take the sell signal. Here's another cross here, and then you buy. And that's a valid strategy. If you look here, here's the cross, and you buy there. Here's the cross, and you sell there, and so on and so forth. Now, it is a lagging indicator if you take the cross, because obviously you already have the top or the bottom in place. But even that works well. But not always, because here's a cross above here, and you would have bought the top there, okay, and then the market crashes down. So it does work, but the only way that the creator of this indicator suggested the strategy, this indicator should be used, is with its predictive function. Now, if you look at the left, the Dow is breaking down, and that trade was a success. Bang, there we go, 25 pips on that. Let's see what happened on the NAS. Boom. All right, so how about that? There's our continuation trade in the money massively. Wow, there we go. Is anyone short on those? That's how we join the trend. Boom. Absolutely crashing. Okay, let's just, I'm going to go back and just move this down even more. Let's lock in some more. Was anyone short on that trade? Nice, Russ, real money. Amazing. All right, we've got 100 pips on the Dow. We've got 60 pips on the NAS. Wow, that was awesome. So as you can see there's the corrective wave. Break of the trend line, and it's lights out. This one here was slightly different. We had double bottom, but note the price action. Rejection of the moving averages, and then a close back below it. I'm going to take out 100 pips on the Dow. That'll do me. And then we're still running 40 on the NAS, which is fine. Okay, so that's an awesome example of a continuation trade. Let's briefly just see. Okay, so here's the DAS and the now. Here's the NAS coming to that bottom there. What do you trade? I trade the now. Coming into the bottom there, we probably will see some strong rejection at that level. Okay, because that's the low of the day. That's the most important level of the day. So I actually might, yeah, I'm going to take out my profit there. We'll lock in 60 pips on that. Okay, boom. All right, done. So it's possible that we will either smash through this level or have a bounce off it. So I'm going to go back to the higher time frames. If we break that level and you're watching, let me know. We'll come back and see what's going on. But let's go back to the daily time frame. We're looking at the MACD. We want to know how can we be sure that this move is going to stop and turn around. And what the MACD does is when we use the predictive function, we use the function called divergence. And so with divergence, if we have a bullish market, what that means is we have a high in price and a corresponding high on the momentum indicator. We have a second high in price and a second corresponding low on the indicator. So we have a higher high in price, a lower low on the indicator. It's called divergence. They're going in opposite directions. That tells us that this move here does not have enough power to continue higher. The momentum is a lot weaker than the initial push, and quite possibly it's coming to an end. All right, now I'll show you something that will blow your mind. If this is a daily chart, if we go back and look at the historic times when the NAS, I was going to say the NAS, the NAS, when the NAS has printed divergence, let's see what happened. There's one there. And you were able to buy the bottom of the market. There's one there. And you were able to buy the bottom of the market. Or if you sold, if you were short, you were able to lock in. So notice that here, there was no divergence. Price basically just fell off a cliff. No indication at all. Other ways to get into that, but this divergence tells us. And I missed one in here. And you were able to sell the top of the market. Then we have one here. Spike the bottom of the market. And then we were able to sell the exact high of the market in 2021 because we had divergence. And you sell the historic high of the market of all time, just below 17,000. So divergence is, in my opinion, the most remarkable, most incredible tool in the whole of trading. Especially for investing in swing trading, because you can actually pick the bottoms and the tops of the markets. It's not hard to do. So what we're looking at on the NAS is we're looking at divergence, which means we're looking at a potential top from where we are right now. Now, let's just go down a time frame, because what happens, and remove some of these lines, what happens when we come to a top or bottom of the market is there is a lot of positioning in the market. There's a lot of jockeying for position, a lot of huge players selling their portfolios. And typically you will see what we call a distribution of price, or a range. And if you look at this on for our chart, that's exactly what we have. We have this huge consolidation. Very, very clear range. Incredibly clear. And this goes all the way back to the 31st of March. You can see that we have a clearly defined top and a clearly defined bottom. And so when this range is broken, this divergence, as you can see, the MACD has already crossed over. And it was the top of the market. So once that consolidation is broken, it's quite possible that we could be going down a long way. And I can take you back on the daily for years, and it will show you the same thing. It indicates the highs and lows of the market. So this is incredibly valuable for investing on a buy and hold basis, but also used for trading because it works on any time frame. For example, if we jump right here on the Dow, we've got divergence on the 3-minute chart. And it's indicating a possible pause in that downtrend that we just sold. So there's no way we're going to sell right here because there's divergence. There might be divergence on the 1 minute chart, and there's divergence on the 1 minute chart too. Lower low in price, higher low on the MACD, and so the Dow will probably push up from here. So it's a predictive indicator that tells you when momentum is waning in the market. No, we have no crossover on the MACD yet, so there's no confirmation that this is going to happen yet. But once we have a crossover, then it could be high degree of probability the low for the next 20, 30, 40 minutes, because it's a 1 minute chart. So this is an incredible tool that you can look at for yourself, and we will look at another time more in depth. But this helps us know, it helps give us a good context for where the market could be going. So now I have a 1 day paradigm that, okay, we are possibly topping out on the NAS here for a few weeks, maybe longer. So I then move down to a 4-hour chart and say, okay, I can see very, very clearly price is locked in this range. Now, let's go down a bit further and let's remove these drawings and look at the price action. Now, after price made, there's our first high, there's our second high. Look at price action. Look at this. Down, 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 spike. It's just going down. And if you look at the red candles, huge selling, massive selling there, and then huge selling there. So that tells us, oh wow, we can't even get above our previous high on every turn. So putting all these things together, it looks like we could be going down from here. Now, the key level really is about 12,800, 12,817. This is our key level. Now notice this was resistance becomes support. Here was the resistance back in, where it broke up on 24th of March, came down, retested it twice. That's the key, absolute key level. If we break that level, then we're going down to about 12,500 real fast. Why is that? Because there's no stops in this area here. Notice that price has gone straight up. Okay, there's no swing lows there where anyone would put their stops. So if we break that level strongly, it's about 300 pips straight down from there. But on a higher time frame, on the daily, every other time we've printed a divergence on this chart, for example, let's look at this one here. From the low to the next swing high was 1,000 points. From this one over here to the first swing high was 1,000 points. Whoops. Let's go back in time. This one here, the divergence here, was 1,300 points. Right, so it's possibly, if this happens, it could be it could be the top for quite a while. And sure enough, here's a divergence playing out on the Dow. So notice that the MACD has crossed the line. We have a lower low in price, a higher low in MACD, and price has turned around. So what this does is it also saves you from getting into a trade at the wrong time. So for example, yes, this is a downtrend, but every downtrend comes to an end. And something else that we'll look at in the future, which we have looked at in the past, is Elliott wave. Market moves in 3 waves. It moves in 5 waves. Down, and then has a correction. So for example, the market moves down in 1, 2, 3, 4, 5 waves. Once those 5 waves are completed, it tends to correct in 3 waves labeled ABC. If it's a strong trend, then that pattern will reproduce over and over. 5 fresh waves down. 1, 2, 3, 4, 5. That's how the market works. Now, obviously, the best place to take your profit is at the end of a wave 5 before the correction takes place. How do we know we're in a wave 5? Divergence. that tells us that this 5-wave sequence is unfolding. And every major investor in the world who is worth anything all uses Elliott wave to understand their market structure. So sure enough, here's our divergence playing out on a 1 minute and a 3 minute chart. We have a break of a trend line, and if you are short, you probably should be getting out of your positions now. See, divergence. This downtrend has weakened, and we don't know that it's not going to stay there and come back down. We don't know that, but we do know that the downtrend is showing signs of weakening. So there's a 1 minute divergence playing out for us, and those are tradable. However, definitely more risky because they're reversal strategies. But what you can do, and the way to trade it, is once this is played out, then you wait for your moving averages to cross over and you look for your buy signal to the upside. And obviously the best place to utilize this is when we come into a support zone. So let's go back and look at the, let me get this right, the NAS, not the DAS, the NAS, because we've now come into that key level on the NAS. So look at that. There we go. So I'm glad I got out of that position because that's where all the buyers were. That's where the demand was. There's our low. 1 minute chart. Let's have a look. And let's bring up and see what we've got. Nothing on the 1 minute chart, 3 minute chart. So there's no divergence on this one, which means we had very, very strong momentum coming into that low. And there were not a lot of buyers actually ready to get into the market. Okay, so this happens. It doesn't tell you every single time, but if it's present, you need to be aware that you could be looking at a potential turnaround. So nothing there. But if we did get a divergence here on the NAS, then absolutely, if we get a buy signal, once price closes above the moving averages and we get our crossover entry, absolutely you want to buy that, even though it's in a downtrend, because you're working on the back of divergence, which indicates a weakening in momentum, a weakening in the selling pressure, which means once all the sellers step out of the market, there's only one group of people left, and that's the buyers. And sure enough, look at the Dow now. Massive buying. There's no sellers here at all green candles. So it's looking super strong. So very, very briefly, because we'll cover this another time, I just want to introduce it for now. If you go to indicators and type in M.A.C.D, moving average convergence divergence, that's the one you click, and you keep the standard settings. The standard settings are 12, 26, 9. Okay, 12, 26, 9. Something else that you can also be aware of is that whenever, and this is something else you can overlay on any strategy, but whenever price is below the 0 line, you only take sell signals. So for example, here's the 0 line. Look how the red and blue line cross below the 0 line. Price breaks down. So now that the signal line and the MACD line are below this 0 line, you only look for sell trades. Same thing on the upside. When price, see here, it's below the 0 line. Once it breaks above the 0 line, we get a pop up in price. You only want to look for buy trades until it reverses back down below it again. So that's a very, very basic introduction to the MACD. It's one of the most popular, if not the most popular indicator used. And, you know, I use this as something else to overlay my analysis, especially for context. So yes, I am trading the kill shot strategies with the signals that we have with Jay's indicator. But this is something else that I can use, especially for high time frames, to give me more confidence in the context of what could be happening next. So for example, on the NAS, I've never said that before until tonight. On the NAS, because I'm aware that we could potentially be moving over, I'm definitely watching the levels that can be broken to look for powerful short entries. And because often when you get divergence, price can reverse very, very quickly. Hasn't happened yet because we've had this long season of distribution of price. Distribution means that there's a lot of players slowly selling their positions. And again, that will present itself in a range. So how do we know it's a distribution of price? It's because there's a lot of selling, a lot of buying, a lot of selling, a lot of buying, a lot of selling, a lot of buying. So a lot of volatility means there's huge amounts of money being exchanged. So Maria, it is the moving average convergence divergence. So go into indicators, top left, just type in M.A.C.D. It's called a M.A.C.D. It's the top one called moving average convergence divergence. So when the moving average and price agree, it's called convergence. We all know what convergence means. It means to move in the same direction. So for, an example of convergence, let me find it, is here. So for example, move up, high, higher high. With the M.A.C.D, it's a high and a higher high, very slightly. That's convergence. And then the following move up is the same, higher high, higher high. So we have convergence. They're moving in the same direction. But when we get divergence, which is the opposite, that indicates a weakening of the trend. For example, down here. Now this one here, it took 2 times to play out. We get our first one, and then we get our second one, and that's the bottom of the market. Okay, and the Dow is exploding higher. Awesome. And the NAS is too. And that's how you buy the bottom and top of market. I've used this in crypto for the last 7 years, and that's how we buy and sell the tops and bottoms of the market in crypto. Now, something else that's probably a little bit deeper, but here's a great example. So let's look at it. When you have a key level in price, as we did here in November, this is just a very, very clear example. Remember, that is a stop zone because people will identify that as a double top, and there is a lot of money sitting above there. Why is that money there? Because anyone who has gone short after these tops have been reached have their stops above the high. So there's millions of dollars sitting above here. Now, the bigger players can see that, the brokers can see that on their books. And so they want to hit those stops and take the market south. Now, if they hit those stops and you have divergence, it's like a 99% probability trade win. Because there's your divergence there, and there's your lower low. So a higher high in price, a lower low in MACD, and their price just falls off a cliff. So remember I said the best place to take divergence is at extreme levels of support and resistance. All right, so that's a big rabbit hole, but I'm just going to drop it there. You don't have to know all of this immediately. Again, it is not part of the kill shot strategy, but it's something that I want to introduce you to, because whether you're trading or investing, here's a signal on the Dow and the NAS on 1 minute time frame at the same time. Whether you're trading or investing, it's something you can use to overlay your analysis for context. I know Mario is here. Mario, are you with us tonight? Mario trades divergence every day. He's not here tonight, but Mario trades divergence every day. I used to trade it every day. It was my only strategy, so it's a valid strategy by itself. But again, it's key for identifying turning points in the market. Much the same as the stars that we use. I think they're derived from an oversold or overbought indicator like the RSI. I think the stars are derived off one of those indicators as well to tell you that momentum is weakening. So that's really cool. Okay, let's have a look at these charts. We have buy signals on red candles. So no buy here. we have to wait and see what happens. On the NAS on the right, we clearly have a double bottom, almost divergence on a higher time frame. The 50-minute candle closes in 2 minutes. This is a bit bullish engulfing, which engulfs the 5 previous candles. Super bullish. Definitely opportunity for a buy here. Counter trend trade. The safest trade is waiting for the pullback into the averages. Notice that the buy signal is right at the 238. Sorry, the chart on the right. I didn't change that. That's the Dow. So there's our pullback on the Dow. We're coming back into the averages now. The NAS is right at the 238. So the preferred trade is a pullback. Look for the bullish engulfing or look for the touch of the moving averages for the trade up. Again, in a downtrend, this is a counter trend trade, so it is riskier. And we've already talked about the fact that the Dow on the right is in a strong downtrend on the 50-minute chart. There is no support right now on the Dow until around 33.64. So we have made this interim low, but we are still in a downtrend on every time frame, including the 60-minute time frame. So just be cautious of that if you are wanting to take this long. The preferred trade is a short trade, but we do have divergence, and this is potential setup. We only have about 25 pips into the 238, so be aware of that if this is a trade you're going to take. I would definitely look to trade the NAS as opposed to the Dow, simply because we have bounced off that strong support. Okay, and notice that we didn't even break it. You can see that we've just failed to break it. So, and we have a huge bullish 50-minute candle. So I would suggest, and we've broken the trend line, NAS is probably the better trade. Notice the strong buying, all these green candles. But I would be waiting for a pullback into the averages for this trade because we're right at the 238. 50-minute candle on the Dow is also bullish engulfing. Yes, there is a trade higher. It's just a riskier trade. 60-minute candle closing it on the 238 right now. Yep, I'll buy this with a very, very tight stop, just below the moving averages. Now, I'm not recommending this trade for anyone, but there is an opportunity here. It's at the moving averages. We have a 50-minute bullish reversal candle. This trade is not guaranteed to be successful, but I've already made pips for the night, so I can definitely risk 20 on the back of 160 or 170. I'm going to move my take profit. If you look to the left, you'll see that price rejected this area up here. If price gets up there, I want to see how it responds at the 238. And then if it gets to that level, because above there will be all the stops from anyone who's gone short. So price is coming down. Let's see what happens. Might stop me out for 20 pips. Again, this is a riskier trade. It's a counter trend trade. The probability of a win is much lower than trading the trend. But that's a risk I was willing to take on this because of the previous wins. Now, notice that the NAS is just in limbo. It's just waiting. And that's a good sign, because after you get a strong bullish move and no continuation, no reaction of selling, it's actually an indication there's possibly not many sellers in the market. So that's a really good sign. So on the NAS, we are looking to move up to that green line, the previous high around 12,940. That's definitely where price would gravitate to. So from where we are right now, it's about 30 pips. If we get up there, the preferred trade is a pullback to the averages though. let's just watch for a few minutes and see how this plays out. I'll take a few questions. I'm not going to take your night because it is a holiday night. 3-minute hopper tie. Yep. Awesome. Yep, Russ, potentially it's bouncing off the 238, but notice that it hasn't, there's not a lot of selling right here. So absolutely, the 238 is capping price right now. It's holding it. But notice there's no selling. There's no indication of selling yet, which is a good sign. So what we're looking at Elliott wave is we're looking at 5 waves. And once you can clearly see 5 waves, that tells you that the initial move is complete. So we have 1, 2, 3, 4, and we're looking for at least one more move. Now, wave 3 cannot be the smallest wave, but it's often the biggest wave. So the biggest move is often the wave 3, then you have a wave 4, and then a wave 5 potentially. So that's how we use Elliott wave. Yeah, we're still below the POC. Okay, I missed that. I missed all of these questions, sorry. The numbers on the right of the MACD waned. Where's my MACD gone? There it is. So that's basically, you could say standards of deviation above the 0 line. They're not important, Wayne. The most important thing is if you're long, you want to be above the 0 line. Now, if this divergence here, notice how this divergence is below the 0 line. If that divergence was above the 0 line, then it's got a lot, it hasn't got as much room to run. The fact that it's a lot lower on this chart, a long way below, means there's a lot more room to the upside. There's a lot involved in the MACD stuff, and we might cover it at a later date. I just wanted to introduce it. The most important thing right now is just definitely focusing on the kill shot strategy, learning to just identify those conditions and components and getting that right. But this is something I just wanted to slowly introduce because it is extremely helpful. Could be extremely helpful in the future. Okay, so entry here on the NAS, just almost touching the 20 period moving average. Touch would be awesome. Hasn't really done it yet. Let's have a look at the 5-minute chart again. This is a counter trend trade. It's in a downtrend, so it is riskier. And it has a lower probability of playing out simply because it's in a strong downtrend. For all the reasons we mentioned before as well, we could have topped out on the daily chart. We could see sellers start rushing in this week. So all of those things come into play as well, and that's why context is so important. Okay, so if we come down, touch the moving average, if you are wanting to go long on the NAS, the aggressive entry is a touch of the moving average. The conservative entry is waiting for a bullish engulfing after the price rejects the moving averages. Let's just wait another 5 minutes and we'll see how this plays out, and I'll let you get on with the rest of your night. There's your aggressive entry on the NAS right there. Very, very small stop. Just below the 50 period moving average. If it gets down there, it will probably keep going all the way down. So let's just see how that plays out for 3 minutes. And then I'll let you guys go because that is just over an hour. So things to remember about tonight. The first thing is questioning yourself. Am I someone who has a fixed mindset, or do I have a growth mindset? Do I believe that it can grow, that I can expand? Do I see my failures as, and this is a question for all of us, myself included, do I identify with my failure? If I fail, do I see myself as a failure, or do I see failure as a learning opportunity? That's what it is. It's a learning opportunity. There's only two people in life, the people who learn from their mistakes and people who don't. And one of the best ways to learn is by making mistakes. So as we make mistakes in traders, like Ty mentioned before, we can journal, we can make notes about what we're doing. We can go back and see and understand what we did wrong, how we can tweak it. That's how we learn. So don't see yourself as a failure because you aren't. Just realize that maybe you need to change and shift the way that you see yourself and start to identify yourself as someone with a growth mindset. No, my mind has the ability to grow. I can grow. I do not identify myself as a failure. This does not define who I am. I am someone that has the ability to learn in every situation, in every season of life. And if you begin to hold on to that sort of way of thinking, then your actions will begin to follow. So, all right, still just looking for a bottom on both of these, but notice that on the Dow, at this stage, there is no continuation of selling pressure. We're just sort of going sideways. So again, price action can tend to tell us what's going to happen. We make the first low. We haven't been able to break that low yet. Okay, so that's watching price here. I always say yet because it can happen. And again, we're still fishing for a bottom on the NAS. And if this turns around, then we'll be looking for a sell signal on the way down because it is a downtrend. But let's see how these two play out. All right, Ty, I will leave it there. Super pumped about the live event. It's going to be amazing in Auckland. I think the second time we did it, we had like 95 people. And it was just an amazing night. And then we had a night in Taupo as well. And we had a ton of people down here. Richard came down here and it was just amazing. So yeah, start to let your people know, people who are following you, people interested, let them know that we're going to be doing this sort of stuff live in a real environment so people can see that we're not digital people, we're actually real life people. And I can't wait. It's going to be amazing. So great to have everyone here tonight. And Ty, back to you.
Bro, thank you. Thank you so much. That was gold. We didn't even catch up today about what tonight was going to be. And you just go and sling in the MACD. We've talked about this for a long time. So yeah, so for those of you who don't know, the previous strategy we focused on a lot last year, guys, involved the MACD. And so I think I'll paste something in the chat for you guys if you want to go and just read about it and understand some of the little bits and pieces, just something from Investopedia. I'm going to drop in the chat right now, and I'll try and remember to put that in the YouTube recording. Also, you can go and click in there and just learn about what are the key components inside that thing if you want. And then I'm quickly going to screen share something, which will be helpful for you guys in what we're talking about with divergence. So let me just screen share this one image I've got here, and you can snap a photo of it if you want. Or so this right here, guys, it says divergence, regular, divergence, hidden. This again, we'll talk about this more in detail, but just save this image because when Mike was showing LL lower lows and a higher low, that means, lower low on price and a higher low on the MACD equals a possible move up. And so these are kind of the four most standard ways you're going to see it. I've heard an educator talk about 16 different types, but really those four is all you need to know. So just snap a shot of that, and then yeah, just something to be aware of. I'm trying to think of anything else I'm going to drop in the chat. For now, that'll do. That's plenty. But yeah, guys, the 13th of May is going to be insane. So excited to bring us all together. Those that can make it, those are in Auckland, around Auckland, keen to drive a few hours. It's going to be special. We haven't done one, like I think, since September. And definitely want to do more this year. So diarize those dates. I'll definitely blow it up in the chat when I've created a Facebook event for it inside the Fit Life Facebook group. And remember, guys, that group, that's just the most perfect opportunity to just go click invite and invite friends to come in and get some free value, and where they can start learning about the key differences between, investing and trading and what it looks like with compound interest and then a strategy. There's so many free videos in there that we've done over the last year, and got over 1,000 people in there now, which is really special. So definitely want to help as many people as we can. Just start to think like this, start thinking about multiple streams of income and what compounding is and how we can all grow in this space. But more than enough waffling from me, guys. Thanks so much for your time tonight. Time to put on a song and run out with that. But I'll have this on YouTube as soon as I can for those of you that missed it. Otherwise, thanks again for your time tonight, Mike, and everyone else. Enjoy the rest of your evening, and we'll catch you guys all in the chat. All right. Good night, everyone.